Hey everybody, welcome back to the channel. This is episode number 3 of the daily recap. Before we get into it, I just want to take a quick moment to shout out everyone that's been showing support for episode number 1 and number 2. I am really enjoying making this content every single day, so it makes me very happy that people are getting value out of it. And we're going to keep doing what we have to do in terms of analyzing what goes on in Wall Street every single day. Today, we've got a lot of stuff to talk about. We've got Palantir with a back-to-back press release from yesterday and today. So a new deal for Palantir. We've got Trump and his new arguments around tariffs and if they're going to be delayed, extended, which ones are going to go into effect. So we got to pair that with the jobs data and kind of try to make sense of what's going on in the labor market, which ultimately has an impact on the stock market. And then we got China, who had a particular response to what Trump has been saying about tariffs, which also will have implications on the broader market. A lot to get into. Let's get into it. All right, so let's get started with the macro. We had a couple pieces of data points today that were incredibly important to kind of analyze what's going on in the labor market, what's going on with the US dollar, and what implications that has for the broader stock market. So number one, private ADP payrolls came out today. Market wanted 140,000 jobs. We came in at 77,000. Obviously, a pretty dramatic miss from the number that the market wanted. We get non-farm payrolls on Friday. Goldman Sachs is expecting about 150,000 jobs. Hopefully we get that. This one looks a bit more discouraging that we're going to get that number. But as a result, well, you had a couple things happen. Number one, the 10-year started to go down. Why did the 10-year start to go down? Because investors started buying bonds. Why are they buying bonds? Because they're afraid that the economy is weakening. And if the economy is weakening, you know the Fed's probably going to raise rates. Now, the question is going to be when the Fed raises rates and if the Fed is smart enough to recognize that the economy is weakening, so they should be ahead of the curve versus being behind the curve and then reacting to the bad things that happen, which is historically what they've done, aka 2021 with inflation being transitory. But the one reason I think markets were actually up today and we ended green across the board is because if the Fed is going to get ready to cut rates, then that is a good thing, even though job growth is slowing down. On top of that, the US dollar hit its lowest level of the year at 104.5. This bad boy was at 112 at one point. Right before Trump's inauguration. A strong US dollar makes it really hard for countries to trade with us because they have to pay in dollars, and those are very expensive against their native currencies. So a weak US dollar opens up the ability for countries to engage in more trade. It's also good for companies that are international, like a Grab, a Nubank, Mercado Libre. These companies that trade in foreign currencies don't have to deal with the exchange being that high in terms of their native currency versus the dollar if the dollar starts to weaken. So the dollar weakening was good. The 10-year coming down was good because bond investors started buying bonds because they're afraid of stocks, because they're afraid of the economy weakening. If you're afraid of the economy weakening, you get to something safe, like a 10-year bond, which causes the yield to come down when you buy it, versus an equity where you have to take risk. But the job growth was the kind of core number of the day, 77,000 versus 140,000. Non-farm payrolls are going to determine how bad the labor market is. My personal take here, I think the labor market is weakening. I don't think it is horrible. We are seeing some updates around government jobs. We talked about yesterday, the IRS is thinking of getting rid of 45,000 employees. You have the Department of Veteran Affairs come out today saying that they're thinking of getting rid of about 90,000 employees. All of these jobs, when they do get cut in the United States federal government, are going to show up in the unemployment rate. That unemployment rate is at 4.1%. That's probably going to go higher. If that goes higher, the Fed's going to be looking at their dual mandate, which is keeping inflation low, keeping maximum employment. We're not going to be having maximum employment. We might get some rate cuts. That's good for stocks. But if the rate cuts are reacting to a weakening economy and people don't have money to be able to buy goods and services, that's not good for stocks. So it's a very thin line that we're going to have to see in terms of how it plays out. Overall, I think inflation will come down more naturally because shelter is really what's propping up inflation, and the labor market is going to weaken, but I don't think it's going to be decimated. That's my current thoughts right now. Maybe I'm wrong about that, but that's currently how the market is shaping up right now. The ISM services data was also pretty good today. On 5 out of 6 metrics, we had above 50. Above 50 means the economy is contracting. Below 50 means the economy is detracting or contracting. Detracting. Okay, well, we'll get some fun comments about that one. But if you're contracting, by the way, the word was limbo yesterday for those that watched. I thought it was purgatory. It was limbo. I was like, I knew it began with an L. It was a limbo. It was some type of word that was like not purgatory, but I came up with purgatory. But yeah, thank you for the comments for helping me find that one out. But in terms of ISM, the fact that we were expanding versus contracting when it comes to services was really bullish. And we saw the market at around 10 a.m. get an uptick because it was like, okay, growth is not slowing down. So I think the market's trying to deal with the fact that the labor market is slowing down. You got other metrics like the Atlanta Fed talking about negative GDP growth that shows an obvious slowing down in the economy. But then you've got ISM data that says, actually, we're not slowing down that much. Or if we're slowing down, it's very little in comparison to what we were doing last year. And the market's trying to reconcile all these different narratives in regards to what matters more, what outweighs this job growth that's not living up to expectations, inflation coming down. Is inflation coming down actually really good? And that means we have to lose some jobs and have some slowing down of the economy, but that's not really deteriorating the economy. So it's kind of like this Goldilocks zone, which is actually really good for equities because we're still growing. Inflation's coming down, even if we're not growing that much. That's not stagflation. That's just normal growth. That's a little bit less than amazing, but not bad growth or not degrowth, which means markets can do well. Like, I think everyone's trying to figure out what is the nuance to all these different missing pieces of the puzzle when it comes to understanding the macro. And eventually, over the next few months, we're going to see how it plays out. My opinion is that, again, I think inflation will come down, growth will slow down, but it will not slow down dramatically. And that should be overall bullish for the broader equity markets. All right, next up, we have Palantir. Palantir and TWG Global launched a joint venture to revolutionize AI deployment in banking, investment management, insurance, and other financial sectors, leveraging Palantir's advanced AI infrastructure and TWG's financial expertise. Now, I actually didn't know this company was a public company. I really didn't know much about TWG. They are a company that is public. And one of the interesting things about TWG is that they are a massive holding company for a lot of other smaller companies that all can use and deploy different elements of AI. So essentially, to me, the partnership aims to help financial institutions adopt a unified enterprise-wide AI approach, moving away from disjointed solutions, basically the same pitch we've heard for many of the customers that adopt Palantir software, and enhancing innovation and efficiency at scale. Now, what's important about this is that this is the second deal back-to-back. One of the things we've been talking about on the channel is that Palantir really hasn't done a lot of press releases this year. And part of the reason is because they are doing more walking than talking, and they just don't need to show how important they are. Everyone knows they're an important company, but it's nice to get two press releases back to back. Yesterday was with Société Générale, which is a bank in France, one of Europe's top banks, $1.6 trillion in assets. And today with TWG, which is allowing a bunch of these holding companies or a bunch of companies that are inside of this macro larger holding company to be able to adopt Palantir software. I don't know if Palantir has individual deals with all those companies. This press release today seems like a joint venture with TWG. But if TWG has a ton of companies that are much smaller companies that could be utilizing Palantir across their entire enterprise, that just means a lot more commercial clients and adoption for Palantir, specifically in banking, finance, and underwriting insurance. And what's really important about this is that the Société Générale deal that Palantir got yesterday is a financial mitigation and fraud AI deployment product that Palantir was working on this with JP Morgan, years ago, but that's a product that we haven't heard a lot about. We heard about energy, we heard about defense, we hear about supply chain, we hear about healthcare. We haven't really heard about banks using Palantir in a while. And so I like to see that two deals back to back are in this sort of financial services arena. I think that's a massive market opportunity for Palantir. And it's nice to see Palantir get two deals in a row. Palantir stock did close at $90 today, which was really nice to see. It was a green day for the broader market. $90.80 right now after hours, $90.13, up 6.79% on the day. All right, next update today we have is on tariffs. So what happened with tariffs today? There's a couple of ways to kind of break down the nuances of what happened today. Donald Trump had a meeting with Justin Trudeau. And in the meeting, essentially, they talked about how to resolve the tariff situation. Justin Trudeau, obviously yesterday, the Prime Minister of Canada, said that they are going to retaliate with about $150 billion worth of goods on the United States when it comes to tariffs, 25% on those $150 billion worth of goods. And today, Trump tweeted, Justin Trudeau of Canada called me to ask what could be done about tariffs. I told him that many people have died from fentanyl that came across the borders of Canada and Mexico, and nothing has convinced me that it has stopped. He said it's gotten better, but I said that's not good enough. The call ended in a somewhat friendly manner. What does that mean? My takeaway is that Trump doesn't want a trade war with Canada. Canada doesn't want a trade war with the United States. Obviously, I think this is going to get resolved. I don't know when it's going to get resolved. I personally think it's going to be sooner than later, but nonetheless, it does seem like although the call wasn't the friendliest, there are negotiators behind the scenes are probably getting things done and trying to figure out how to resolve this situation and ultimately get a deal coming soon. So I think that deal is coming, and that is also what got the markets to be a bit excited, which is why we ended green on the day. Another reason why the markets were green is because Trump delayed by 1 month his automotive tariffs on GM, Ford, and Stellantis. So that is confirmed. That's what the press secretary said at about 2 p.m. today. Now, why is that happening? Well, I'm sure the CEOs of those companies called up Donnie T, and they were like, hey, man, like, you can't do this. You just can't do this. Or at least you got to give us another month to figure out what we're going to do, because you cannot do this, right? And I think at some point, Trump knows he can't do this. He obviously wants to be able to navigate bringing American manufacturing back to the United States, but he knows that it's going to be really tough for these companies to switch their supply chains, what is essentially overnight if he were to put tariffs on immediately. So he's delaying those automotive tariffs. Why is the market up on that? Because the market doesn't believe that Trump's ever going to really institute these tariffs. A month from now, there will be some other reason for why we're not going to have tariffs. And as a result, I think the market's basically calling BS on a lot of the tariffs. And they're deciding to say that these tariffs are not going to be as likely as what they initially thought back when he was running for president. Now, the final part of tariffs is that China came out today and they said, we don't care what you do. Essentially, they said the fentanyl issue is a flimsy excuse to raise U.S. tariffs on China imports. Our countermeasures to defend our rights and interests are fully legitimate and necessary. The U.S., not anyone else, is responsible for the fentanyl crisis inside the U.S. and the spirit of humanity and goodwill towards the American people. We have taken robust steps to assist the U.S. in dealing with the issue. And then finally, they said, if war is what the U.S. wants, be it a tariff war, a trade war, or any other type of war, we're ready to fight till the end. Now, basically, this is China saying, hey, we're Big Daddy. You can't Big Daddy us. You can't just slap on these tariffs and act like we're not going to do anything. The problem is China's economy is in shambles right now. They barely have stimulus. Xi Jinping's starting to talk up free market capitalism again after 5 years of basically saying communism is better than capitalism. Like, they're trying to bring foreign investment back into the country. They did guide yesterday for 5% GDP growth with 2% inflation, which would be not bad. But they can't afford the tariffs. The United States can't afford the tariffs either, but I think the United States can deal with it in a little bit of a better way than China can, because China's economy has been decimated, especially if you look at what's happening with China's real estate. So I think there will be a deal with China and the United States as well, just like I think there's going to be a deal with Mexico and the United States and Canada and the United States. When is that going to happen? I don't know. But China right here is saying, hey, we're ready to fight. And if you push us to the edge, we are not going to hesitate to push you back. So eventually, I think this gets resolved. Is it a year from now, 4 years from now, a day from now, 4 months from now? No one knows, which is why NVIDIA is trading at a 27 PE, because the uncertainties of this market are still so substantial. But I also think the market's recognizing that tariffs are not going to last for that long. Next update is on Robinhood. So we talked about yesterday, Robinhood was at this conference, or CEO Vlad Tenev of Robinhood was at a conference where he basically said that they are growing like crazy when it comes to gold subscribers, futures, net deposits, etc. We covered all that yesterday. Really good growth. Today, they had their first day of 2 days of giveaways. And I was live on the market close. And if anyone saw it, then you hopefully got to enjoy in the 9 out of 9 questions that we got right. And then we got the 10th one wrong. Here's the clip of how that played out. Number 10, number 10, number 10, number 10, number 10, number 10.
The next question, just a few left.
Oh my gosh.
Q10.
Oh my freaking gosh. Come on.
Company became the first to reach a $1 trillion market cap. The first to reach.
I did Microsoft. I think it's Microsoft, right? It has to be Microsoft. It wasn't Amazon. It was not Apple.
Has repped this company hard.
No, it was Apple.
That's the reason why my first
No, it was Apple. No! No!
I really wish he had bought me some stock in this company when
No!
37 cents a share. Alas,
No.
died in 2013, so he never got to see his beloved company reach $1 trillion in market cap, which happened on August 2nd, 2018. I love you, Uncle Al, and I love all of you who answered A for Apple. A for Allen, and A for Apple. Coincidence? Another mystery. Let's take a red, delicious bite out of...
Although I lost, the takeaway from this is that there were over 390,000 people on the first question that were competing in this Robinhood giveaway, that were on their platform at one time trying to compete for $1 million of Bitcoin. 615 people won. So those 615 people are getting about $1,600 of Bitcoin, which is pretty cool. But Robinhood got 400,000 people to be on the app at once playing this game. The level of engagement and marketing this company is doing is beyond anything I've ever seen before. And I think they're just getting started, and they're taking this to the next level when it comes to keeping users engaged and getting them to have an emotional attachment to the brand. So I bought more Robinhood yesterday. If you're a Robinhood shareholder, I really do think that there is a long cycle of growth built in for you over the next decade. Could the stock go lower? Yes, if we have sort of a bear market. I think Robinhood is very volatile. It's a proxy in the bull market. So obviously it can go lower and can go below 40. But at this point, I just think their growth is phenomenal. And I think that growth will continue to play out over the next decade, along with the level of innovation and marketing. It's really hard to do that. They're proving they can do that. And as a result, I think Robinhood is just really doing the right thing when it comes to keeping users engaged and getting those users to care about the brand. All right, next update is on Tesla. We've got two important updates right here. Number one, Goldman Sachs cut their Tesla price target from 345 to 320. They said we lower our below consensus delivery estimates for Tesla, reflecting the quarter-to-date data for key regions, China, Europe, and the US. Europe is showing some pretty dramatic slowdowns year over year, as well as what we believe are broader demand trends. So this is not that surprising. We had a lot of price target upgrades when Tesla was running to about $400 back in January and late December. This is what analysts do, right? They get very excited. The stock is running. They need to upgrade the stock. And because they need to upgrade the stock, you start to get all these different analyst notes saying, hey, well, the Trump relationship is good, or this is good, or that is good. None of them actually believe that. And as the stock's falling, now they start to feel a little bit more scared and they lower their price targets. Nonetheless, they are correct about the fact that demand in regions, and this is not ideological or subjective, this is the numbers that we saw in Europe, are going down. As a result of that, if you're bullish on Tesla and you're buying it at these levels, which I bought at 288, about 10 shares a week ago, like, look, I'm buying it for something way out into the future. I know I'm overpaying. I know it's probably overvalued and overextended, but at some point you got a DCA. And I believe that FSD and robotics will take this company to the next level. In the short term, though, Q1 automotive revenues are probably not going to be that good. I don't think energy is going to save the quarter. And then if Tesla does not have a meaningful launch in Austin in June, which we're going to see how that plays out, the street's now going to have a lot of questions about when is Robotaxi coming out, if it can compete against Waymo and Google, or Waymo and Uber that are already out in Austin. And what is the experience going to be like? Now, personally, I think Robotaxi is going to win. I think it's just a better product, better service. It's not going to be as guarded by the square miles and footage that Waymo is left to because of their LiDAR system versus the neural nets on Robotaxis. But the market has to find out how that plays out. So I'm not surprised by seeing price targets come down. It's probably inevitable. The question is simply going to be, what does their Q1 automotive revenues look like? Again, Tesla's also doing 0% APR for Model 3s. Now, the bullish argument for that is that they're trying to get rid of excess inventory to unveil new vehicles and new models. The bearish argument is they're not selling enough Model 3s and they need to hit their numbers, and they're trying to incentivize people with 0% APR. So we're going to see in their next quarter what those results look like. The next piece of news on Tesla was actually really interesting. Tesla India has announced a hiring event for sales advisors, and a couple sources are showing that Tesla is signing a 5-year deal to have their first showroom in India, which is great. Tesla in India would be awesome. I think a lot of people that would be buying a Tesla would not be buying it for FSD because I don't think FSD is going to work in India yet. It'll take some time before that happens. I think they'll be buying it for a status symbol, which will probably be the main reason why Indians who are in the upper class engage with buying a Tesla. It'll probably be much more expensive in India, but Tesla's hiring in India. And so it does seem like Tesla will come to India, which will be very exciting to see the growth of that business in a different part of the world. All right, last update for the day. We're going to do a rapid fire of some quick headlines. Number one, Apple introduced the M4 MacBook Air, featuring up to 18 hours of battery life and a sky blue color. They also introduced the iPad Air with a keyboard. I continue to believe that Apple is pretty expensive on its valuation, but the investor base probably wants to flood into Apple when things get really scary because it's Apple. But nonetheless, we have a new MacBook Air, new iPad Air. Let me know if you guys even use Apple products, or at least if you update your Apple products. I have like 5 Apple products in front of me. Not really in the mood to update them every single year, but nonetheless, I'm saying Apple's expensive, but I own a ton of Apple products. Let me know if people feel the same. Number two, Amazon launched a new unit dedicated to agentic AI, which uses human-like reasoning to manage complex workflows, as stated by AWS Vice President today. AWS CEO also said that they highlighted agentic AIs as a potential multi-billion-dollar business for the company, noting that Amazon has already saved 4,500 developer years through its AI-driven coding tools like Amazon Q. What's also interesting about this is ChatGPT founder Sam Altman of OpenAI came out today and said he is thinking of selling agentic AIs, agents that can do PhD level work at $20,000 a month to enterprises. Will this happen? We'll see. I mean, if there's some enterprises that are paying a software developer $250,000 a year and you could pay an agent to $20,000 a month to be able to do that. So what's 20 times 12, 240,000. So I guess that software engineer would be having to make a lot more than 250,000 because then it would net out to be equal. So the best software engineers are closing in on that 500 to 750 with stock, equity, etc. If you could get rid of that and pay 20,000 a month, which is 250,000 a year, basically, no healthcare, no benefits, nothing like that. I mean, yeah, that's pretty interesting for your margins. And so Amazon's exploring that as well. OpenAI is exploring that. I think a lot of these software platforms are trying to figure out how do we replace these engineers that are super, super high level by just having better agents, just like Uber was trying to figure out how do we replace taxi drivers. This is the inevitability of technology. This is going to happen. And I don't think that's stopping anytime soon. But if you're a shareholder of any of those companies, that should be really good for overall margin expansion as those companies have less costs and more productivity. Another couple of headlines: Morgan Stanley banker Michael Grimes is expected to lead the new U.S. sovereign wealth fund that Trump announced a couple of days ago, or a couple of weeks ago. The wealth fund is intended to be financed by tariffs imposed on foreign countries. We haven't really instituted any tariffs because every time we keep walking them back. So I don't know where we're going to get the money to pay for the crypto strategic reserve or the tariffs, but nonetheless, that's what the Trump administration is saying that we have to do. Final update: the Trump administration is also proposing to sell 443 federal properties, including the Department of Justice and FBI's headquarters. Currently, most U.S. government agencies don't even occupy 50% of their office space. A lot of this was found out by Doge as they started to do more digging in terms of what government buildings do we need, what leases are we paying out on. Okay, I said that was the last update, but I've actually got one more update. This is going to be a quick one that I want to throw at everybody. Hopefully this video, we get this to 20 minutes. I'm trying to adjust this whole 6-hour live stream versus 20-minute video stuff. But zero DTE options, or 0 days to expiration, meaning you buy a SPY 610 call in the morning and it expires by 4 p.m. in the afternoon. They accounted for 56% of option volumes in February. This comes as average daily volume for the S&P 500 options hit a record 3.49 million contracts a day, which is actually very bullish Robinhood because that means a lot of people are trading. But the point is, a lot of people, I know February was a bit risk off at the end of the 2 weeks of February because we had a lot of volatility on those growth stocks, but people are trading options. 56%, over half the options volume being 0 DTE, are kind of crazy. And it's just going to show you that, yeah, people are trading options, people are engaging in leverage, people are engaging in volatility. That might be good, that might be bad, but it is what it is. And people definitely are showing a broader interest in still being risk on and playing the volatility of the market, even if some of these growth stocks are down. The S&P 500 only down about 2% year to date. So volatility has been bad on some of the growth stocks, really not that big of an impact on the broader indices, which is why we're seeing so much options volume and liquidity being fueled into the broader market currently right now. All right, that's it for me. Thank you everybody for listening and watching. This was number 3 of the daily recap. I really enjoy putting this stuff together. I am hoping everyone else is enjoying engaging with the content. And yeah, this is super fun to do every single day, and I'll be doing it every single day, Monday through Thursday. If you got all the way to the end, you get to enjoy some bloopers because, I have a lot of bloopers, and maybe we should have a section for bloopers. So if you got to the end, let me know. Here are the bloopers of today's show. To everyone who's been showing support for episode number 1 and number 2. I'm really enjoying making this content, and I'm glad that people are getting value from this content. And so we're going to keep doing it every single day and keep getting the guy. Hey, everybody, welcome back to the channel. We are here for episode number. Hey, everybody, welcome back to the channel. We are here for episode number 3 of the daily recap. Before we get started, I just want to give a quick shout out to everyone who's been showing support. I can't talk.